Welcome to this explainer. Today, we're diving into a really fascinating economic tug-of-war. We're going to break down the Reserve Bank of India's absolute latest macroeconomic projections and look at the intense geopolitical tensions that are, well, literally pulling at them from all sides. So if you're looking to understand where one of the world's biggest economies is heading right now and exactly what's driving those expectations, you are in the exact right place. Let's get right into it. Okay, let's kick things off with this single most important number you need to know today, 6.7%. Just recently, on August 5th, the RBI officially upgraded India's gross domestic product growth forecast for fiscal year 2027 to that exact number, 6.7%. It's a huge baseline, and it really sets the tone for everything we're going to explore today. But, you know, a number in isolation, it only tells half the story.
Which brings us to our first main focus, India's upgraded growth forecast.
To truly get why this 6.7% figure is such a big deal, we have to look back at the central bank's shifting expectations over the last few months. And honestly, it brilliantly illustrates the crazy volatility at play right now. Think about this. Just a couple of months prior, during their June Monetary Policy Committee meeting, the MPC, they actually dropped their growth estimate down to 6.6%. And that was falling from an even earlier projection of 6.9%. But then, fast forward to August 5th, they totally reverse course and bump it back up to 6.7. That back and forth, it isn't just institutional indecision, not at all. It's a real-time, live-action reaction to a global economy that is constantly shifting under our feet. So let's look at the specific engines of domestic growth driving this shift. What exactly changed their minds between June and August? Well, the bull case that convinced the RBI to confidently upgrade their projections really boils down to three main things. First, highly resilient domestic demand. Second, sustained expansion in manufacturing activity. And third, sustained expansion in services. RBI Governor Sanjay Malhotra explicitly credited the upgrade to these exact factors. In the real world, this means folks inside the country are just continuing to buy goods, build products, and provide services at an absolutely booming rate. It's like this massive, insulated engine powering the whole economy forward. But of course, we have to talk about the flip side, the West Asia war risks. Because in economics, there's always an opposing force, right? And what's really striking here is how sharply this external threat contrasts with all that domestic success we just talked about. Governor Malhotra didn't just hand out good news. He issued a very stark warning. He pointed directly to the re-escalation of the West Asia conflict that's been bubbling up since early July. He was super clear that this specific geopolitical tension is bringing renewed uncertainty to the table, and it acts as a massive external risk to India's economic stability. So how exactly does a conflict in West Asia threaten economic numbers over in India? It basically comes down to two major headaches: amplified volatility in Brent crude oil prices and renewed uncertainty around global supply chains. These overseas conflicts hit very close to home. I mean, when Brent crude prices swing wildly, energy costs for businesses become completely unpredictable. You add in disrupted supply chains, and suddenly that very manufacturing sector we just said was driving India's domestic growth, it's facing a massive, complex hurdle. Let's break this down further with a quarter-by-quarter breakdown. Balancing these competing forces, the sheer domestic strength versus global instability, the RBI actually mapped this dynamic out for us across the 4 quarters of fiscal year 2027. They're projecting a really strong 7.0% start in the first quarter. Then we see a slight mid-year dip, dropping to 6.4% in Q2, before ticking up just a hair to 6.5% in Q3. And finally, they expect a solid rebound back up to 6.8% by the fourth quarter. It's a highly realistic roadmap. It anticipates some turbulence and bumps in the middle of the year, for sure, but ultimately points to a very strong finish. Next up, let's see what the expert macro consensus is looking like. So that's the view from inside the central bank. But what are the outside experts saying about this exact same data? Their takeaways are honestly super revealing. Take Sakshi Gupta. She's the principal economist at HDFC Bank. She states, "This reinforces our view that economic momentum remains resilient despite the disruptions due to the West Asia conflict. We estimate Q1 FY27 GDP growth at around 7.5%. Notice what's happening there. She's actually taking an even more optimistic stance than the RBI itself. Remember, the RBI forecasted 7.0% for Q1, but Gupta is calling for a massive 7.5%, noting that the overall macro backdrop is actively improving. It's a huge vote of confidence from the private sector in India's internal economic engines. And all this robust economic data leads us straight into policy territory with another key number, 5.25%. Because of this incredible domestic resilience, the RBI decided to keep its benchmark interest rates perfectly steady at 5.25%. And this wasn't just some sudden one-off decision. This marks the fourth straight meeting where the central bank has held this exact rate, maintaining a strictly neutral stance. They are watching the data like a hawk, trusting that robust domestic growth, and consciously choosing not to rock the boat with any premature rate changes. Which brings us to the ultimate question we are left with today. Can India's domestic resilience actually continue to outpace global geopolitical chaos? As we wrap up this explainer, looking back at those steady interest rates and upgraded GDP forecasts, this is the big lingering puzzle. We're really left wondering, will internal demand and manufacturing truly be enough of a shield if those external energy and supply chain shocks get worse? It's a fascinating economic balancing act. It's one that truly defines the modern global economy, and it's absolutely one we're going to be watching very, very closely. Thank you so much for joining me, and keep your eyes on those numbers.